I think it's about time that I finally updated you on what my portfolio looks like as of the end of 2024. I'm going to go through each section of my portfolio to show you exactly what I invest in and why, and then I'll also give you exact percentage compared to the rest of the section, but then also compared to the entire portfolio. I recently went over this information with my private Patreon group along with some future buys that I'll be doing in the next couple weeks and also over the next year. If you want to be in on the inside scoop before I announce it here on YouTube, it's only $20 per month, and we do a live Zoom with all the members in the group every 2 weeks where you can ask all your questions and learn alongside hundreds of other investors. Click the link down in my description to join. My name is Nolan Govea. My students call me Professor G, and I made this channel to make investing simplified. I'm going to go over each section individually, and then I'm going to bring together the entire portfolio. Many times when I meet with individual clients, they show me their portfolio and give me the percentages based on that portfolio, but really what they're doing is giving me the percentages based off of that one piece of the portfolio. We have to look at the entire thing to make sure that you're balanced correctly. So let's start here with my real estate section. To me, I don't count one's primary residence, where you actually currently live, as an investment. Now, if you're house hacking, or if you are renting out a room or renting out the casita or something like that, or you have an ADU even, that would be something where you're bringing in money with your house. But other than that, if all you're doing is paying down the mortgage and increasing your equity within the home, you're not actually making money from the house, you're kind of actually spending money to live there. But it is kind of a makeshift savings account, and so I do like it, and I do think, you're building equity, and it's a great thing to have, obviously. But when I'm talking about investments, I'm talking about something that's going to put money into your pocket, something that's more of an asset in that regard, and so I'm talking about rental properties here. You guys can debate down in the comment section whether or not you think the house is an asset or a liability, but to me, I'm talking about rental properties. So I used to have 2 rentals. I used to have a short-term rental where I would do Airbnb, and then I have a long-term rental. Both of them have their pros and cons, and it was good for me to go through both different types, but to me, I'm definitely more of a buy and hold investor when I'm talking about stocks and equities. So for me, that long-term real estate, long-term rental is something that's a little bit more in line with my goals and just my amount of time that I have to even work on it. With the short-term rental, the Airbnb, I could have had a property management company just handle that and I would have gotten a paycheck or whatever every single month, but I didn't really want to do that. I like to be hands-on in whatever I do. So I tried that for about 6 months, maybe 9 months or so. And then I just decided, I don't really like this. I sold out of the house. It was something where I broke even on it. So not the end of the world there. I did learn a lot of things. But in my long-term rental, that one has been amazing. I bought that one in 2019 or so, right before COVID, right before all the price appreciation in homes. So I feel very blessed. I'm very thankful that I was able to get into that before all of that and when the rates were down low. So for me, I definitely see the value of holding a home and having a home, and recently being able to rent that thing out and then being able to have a long-term renter is just very, very solid. You get much more peace of mind and they treat it like an actual home because they're going to be living there for a long period of time. So for this portion in my portfolio for real estate, it's pretty straightforward. I used to have 2 rentals and now I have 1, but we'll be hunting for deals in 2025 with the rates hopefully coming down to a manageable range by late 2025. So now is the next section in my 401k/403b. For my university, it's a 403b, but you probably have a 401k or a TSP or something of that nature. This one's pretty simple as well. When you go to look at what types of options you actually have within your retirement account, your 401k or whatever, they're usually a bunch of different types of names and they're different types of accounts, a lot of target date funds, maybe S&P 500 funds, some growth, some small cap, some mid cap, and they all have crazy fees. So you have to really look and find which types of accounts you want to invest in, but watch out for those fees. For me, the best one that I found and the one that I usually recommend with my clients is going to be something like a large cap US fund or something that tracks the S&P 500 or the total US stock market. For me, I chose one that tracks the S&P 500, and that's what 100% of my 403b is in. So now for my next retirement account, I also have a Roth IRA. And so I used to invest in the Roth IRA just normally for the first couple of years of having the Roth IRA. And then recently, over the last couple of years, my income has exceeded the threshold that you're allowed to invest directly into the Roth IRA. And so I've been doing the backdoor Roth IRA every single year. For my retirement account specifically, I definitely just believe in the 3 ETF portfolio that I talk about all the time on this channel. These will just keep building and building until retirement age of over 59 and a half. My 3-fund portfolio consists of a foundational section like the S&P 500 or total stock market index, a less volatile section like a value or dividend ETF, and then a more volatile section for higher risk but hopefully higher reward like a growth ETF. Since I have such a large amount going to the foundational portion in the S&P 500 in my 403b, I don't invest in that here in the Roth. So my Roth is pretty boring and mostly split between 2 categories. For dividend/value, I choose SCHD, which is the Schwab US Dividend Equity ETF. And then for the growth side, I split between 2 growth ETFs and a Bitcoin ETF. On that side, I have 25% in SCHG, 20% in QQQM, and 5% in the Bitcoin in the Fidelity Wise Origin Bitcoin Fund, FBTC. So in the Roth, I'm 50% value/dividend and 50% growth, but in my retirement in total, I'm about 40% foundational, 30% value, 30% growth. So now to the fun one, the taxable brokerage account. And this one I have the most positions compared to everything else, but it's still pretty light compared to what most people have. So I'm going to tell you from my smallest position all the way to the largest position. And my smallest position is actually one that I made even smaller this year. When I was doing my MBA studies, I was all about this guy out in China that was just absolutely crushing it, and he was building a business that was actually better on paper than Amazon, and it was actually doing better in all categories than Amazon, was about to take over the world, but then the Chinese government came in and just snatched that thing up. And this guy was Jack Ma, and his company is called Alibaba. So at the time when I was investing in this, that company was a behemoth. It just looked like it was going to go crazy and just get bigger and bigger. But then the Chinese government came in and did what they did, and it gave me a crash course in learning that not all governments are the same. So I definitely won't be investing in any individual companies in China or those types of governments ever again, but it was a good lesson for me and for my students. In my portfolio, about 0.5% is allocated to Alibaba at this point. The next position is the newest position as far as individual stock within my portfolio. We all know that AI is just booming and is going to continue to boom, and I wanted to get in specifically in the software side of AI, and so I chose Palantir. This is a new position, and so it makes up 2% of my taxable brokerage account. And on November 18th of this year, I told the Patreon group that I'm buying, and many others did the same. In 1 month, we're all up over 21%. The next individual stock in my account here is Disney. Again, I really like the CEO Bob Iger back in the day, and I really like the competitive advantage and a couple of the other things that they have within this company. But I bought a lot of this back then when I was really doing more research specifically in individual companies at the time, and since then I haven't really added to it. Disney makes up about 2.5% of my taxable brokerage. The next stock that I hold is Apple. I don't need to say a lot about Apple here because I'm pretty sure we all know who they are and what they are. They're just going to be a great company for years and years to come, but I do think the next year or two they're going to trade a little bit sideways as they figure some things out. This stock makes up 3% of my brokerage. Next is probably my favorite company overall just because I look up to and have learned so much from Warren Buffett. And this is Berkshire Hathaway. Berkshire makes up about 4% of my brokerage, and I'll be adding to this position more in 2025 and even now because with so much cash sitting off to the side, I know Buffett's poised to make some big moves soon. My largest individual stock is Microsoft. They're the clear leader in the world of AI, specifically broadly, and have invested so much in building out AI and just having their hands in anything that has to do with AI. Along with already having such a sustainable and strong business model from before, they just added this huge piece to the business. They also have so many governmental contracts and such sticky customers that this company is just going to continue to soar. Microsoft makes up 5% of my taxable brokerage. So in total, individual stocks make up 17% of my taxable brokerage. The next position is made up of 12% in SCHG, then I also hold 10% in QQQM. So of my growth ETFs, this makes up 22% of my taxable brokerage. Then I hold VOO at 30% of my brokerage. VOO is the S&P 500 and is one of my favorite ETFs, but one could also go with SPLG here because it's the same thing except the share price is way, way lower. They both track the S&P 500 the same. My last holding here is the dividend portion, and for that, you all know I love SCHD. SCHD makes up 31% of the brokerage account. So for this portfolio, when you group the correct stocks within the correct categories, it looks like this. 31% in dividend/value, all of that is in SCHD, 32.5% in growth, and that's split up with 10.5% growth stocks and 22% growth ETFs, then 36.5% in foundational. Berkshire Hathaway and Disney are considered foundational in my opinion, and that's 6.5% in the stocks, and so then I have 30% in VOO, or the S&P 500. Next is cryptocurrency. When I first started investing in crypto, it was back in like 2018 or so, and when I first started out, I just really liked to research all the new technology that was coming, and specifically all the little altcoins and how they work. I thought that the problems that they're trying to solve were definitely ones worth solving, and that they made a good case as to how they could solve them. That's usually how good businesses are built, so I was thinking that maybe this would be the same. After many years of research since then, I really only believe in Bitcoin. I do believe in the blockchain technology behind all of this whole crypto space, but specifically Bitcoin is the only one that I've really been adding any money to since the last couple of years. So my largest position here by far is Bitcoin at 72% of the crypto portfolio. My next largest position is Ethereum, and that makes up 15% of the crypto portfolio. Next is Cardano, which makes up 8%. And then I hold Chainlink, XRP, Polygon Matic, and VeChain, which makes up about 5% in total. Again, I do very much believe in Bitcoin and in the blockchain technology in general. I've just seen way too many people lose way too much money too quickly and get the rug pulled out from underneath them with pretty much everything else in the crypto space. So I'm still a little bit weary about almost everything else, but I do like Bitcoin. So on to this next section here, and like I tell all of you to do, I want you to have cash on the side for some emergencies, and I do the exact same thing. The closer you are to retirement, the more that you should have in cash, or the more that you should have at least outside of the stock market or outside of any risky type of assets, because we want to keep that money as stable as possible. For me, I keep about 6 months worth of living expenses in a high yield savings account, and then I have just a little bit extra that I've been stashing every single month just in case we do see a big dip in the next year or so, which it's looking less and less likely that that's going to happen. But I've been putting just a little bit aside. Most of my money I've been dollar cost averaging every single month. But anyway, my high yield savings account makes up about 3% of my entire portfolio, and I'll show you that in a minute. Another category that I have that you may not have, but some of you probably do, is one specifically for my business. Any good business takes part of their profits and reinvests that right back into the business to help it grow or to just make it better for next year. I've been doing that in every single one of my businesses over the last 15 years, and it's always worked out very, very well for me. This makes up another 3% or so of my portfolio as I hold this in a cash account as well. So now I'm going to bring together my entire portfolio and show you everything as far as percentages for the entire portfolio so you have a better idea of the entire thing. When I meet with my clients, I try to make sure and get the full picture and get the entire portfolio so that we can both look at specifically where there might be holes or where you're overbalanced in certain things. And we want to make sure specifically that your risk is in the correct categories and that you're investing for your specific goals and not just something that you've seen somewhere else. My portfolio looks like this because it works for me and it hits exactly what I'm supposed to in order to hit my goal eventually. Yours might look definitely different than mine, and we both will be right. So here we go. My high yield savings account makes up 3%. The cash on the side for my business makes up another 3%. The crypto side of the portfolio makes up 12%. Real estate is about 23%. The growth section is 18%. SCHD, or the value/dividend part, is 18% as well. And then foundational for the S&P 500 is 23%. Crypto was never meant to take up that much of my portfolio, but like I said, I've been investing in it for about 6 or 7 years now, and it's appreciated a bunch, especially lately at all-time highs. And so at the end of this bull market, probably sometime in the middle of 2025, I'm going to cut that in half, take those profits, and put that into the 3 ETF portfolio. I'll be adding to my 3 ETF portfolio every month in 2025, and for sure Berkshire Hathaway, Microsoft, and Palantir as well. Watch this video on exactly what my 3 ETF portfolio is and how you can understand it a little bit more to make your portfolio a little bit more balanced and stronger. Or watch this video that I just did this week to keep you going strong in your investing journey.